Discussion forward, I am now joined by Siddharth Rai Mangla, Senior Research Analyst at Stockbox Technology and Market Expert Anand Tandon. Gentlemen, good afternoon. Thank you so much for joining in. Siddharth, let me start with you. Of course, volatility is expected on the last day of the monthly expiry. What are the charts suggesting now? Will we see an up move from these levels?
Hi Sonal, good afternoon, and thanks for having me first of all. See, Sonal, after what we saw yesterday, there was a weakness in the second half yesterday. So it was very important for Nifty to go back above 26,000 in the first half itself today and spend some time in order to get back the momentum. But it did not happen, and the weakness started coming in from there itself. It just got accelerated because of the expiry effect, and as Nifty came around 25,950 and spent some time there, a lot of unwinding took place in those put options, put writing positions. So which is why we saw this accelerating below 25,900. I do think that now the doors have opened for further downside towards the next important levels, which we should be looking at are 25,750 and 25,700, and because those are the next important supports from here for Nifty. So a little more downside can be expected in Nifty. The index does not look very good, at least as long as we are below 25,950 on the index.
Well, thank you so much for that, Siddharth. Well, now, if I could bring you in, if you've looked at the charts of restaurants brand, it has been a significant underperformer, as well as its peer, Jubilant Food. Any preference in that particular space?
Yeah, sure, Vivek. See, if we talk about restaurant brands, it's consistently, as you said, it has been consistently underperforming for the past 2 months. Right now, if we purely talk about the structure tells us that around the base of 60 rupees, it has a very strong support. So if anybody is looking to take a position in this counter, we'll have to wait for a while. We have to wait and watch how these things turn out, these updates turn out, and if the stock manages to give us a substantial turnaround from the these levels and probably go back above the 67, 68 mark, then definitely we can start seeing a turnaround in these counters. But for now, it's a complete avoid.
Okay, complete avoid. That's on restaurant brands.
Is concerned, do you see further strength for it from here on? And what about the OMCs? Do you feel that today's fall has probably started a downtrend, or it could recover?
Yeah, sure, Vivek. See, definitely the other OMCs like BPCL and HPCL, they definitely look weak for now, because there's been a sharp fall for the past 5-6 sessions consistently. And even now the next important supports are straight away at like more 3 or 5% more downside from here is particularly possible in the next 3-4 sessions. So OMCs are a complete avoid for now. Reliance is an exception. Reliance definitely looks a buy, because 1500 has acted as a very important support, and in fact even in the last couple of weeks the supports have shifted higher for this counter. I do think that this will be one heavyweight which will be taking the whole index on its shoulders. So Reliance is clearly looking a buy right now. The other OMCs, BPCL, HPCL, they are a clear avoid.
Okay, anything else from the PSU all space, Siddharth, which looks interesting, maybe on the downside or the upside?
Yeah, definitely. Sonal, I do think that the PSU banking space is very attractive right now, and this is going to be one place which will be carrying the banking, index as well upwards in the future. SBI is very attractive, and I do think we'll be seeing the levels of 1,000 in the upcoming days in this counter. So SBI can be bought right now, even in the spot. The spot is trading around 930, 984, 983. Ish, we can buy it here. The stop loss will be at 970, and as I said, the targets will be above 1,000. The first target being 1,020, the second target being 1,040.
Okay.